Hey everyone, welcome back to Corporate Decoder, the place where we make sense of the numbers that really matter to your investments, and sometimes what they do and do not say can be quite the plot twist. Today we are diving deep into the latest quarterly report from Sagimet Biosciences Incorporated, codename SGMT, on the Nasdaq. They released their financial report for the period ending the 30th of September 2025. And let me tell you, it is a mixed bag of promising developments and the usual cash burn that comes with trying to invent the next big medicine. So grab your coffee because we are about to decode this before we dive into the juicy financial details. If you love getting these kinds of no-nonsense breakdowns of important company reports, make sure you are subscribed. And hey, we have a fantastic community over on Discord where we discuss these filings in real time. The link is in the description below, so join us there. Alright, let us cut to the chase. The main event in any quarterly report for a company like Sagimet is always the financial tables. These are the snapshots that tell us where the money is going and where it is coming from, or more importantly, where it is disappearing to. Let's look at their balance sheet as of the 30th of September 2025. On the asset side, they had about $128 million. Now, a big chunk of that was cash and short-term investments, around $119 million. This is what keeps the lights on, but compared to December 2024, their cash pile has gone down significantly, which is expected when you are spending on research. They had about $32 million in cash and $75 million in short-term investments. Their total assets stood at $128.4 million, a decrease from over $160 million at the end of the prior year. This might look like a step back, but for a clinical stage biopharma company, it often means they are strategically deploying their capital to fund their vital research and development. We will see more on that in a bit. On the liability side, they had about $9.1 million in current liabilities. This is pretty manageable. Now, the real story for Sagimet, and for most companies at their stage, lies in their operations and what they are spending money on. If we flip over to their condensed statements of operations and comprehensive loss, things get interesting. For the 3 months ending the 30th of September 2025, they reported a net loss of about $12.9 million. That is a pretty big chunk of change for just 3 months. Looking at the longer 9-month period, the loss balloons to over $41 million. Now, that sounds scary, but it is crucial to see why they are losing money. Most of it is tied up in research and development. For the third quarter alone, their research and development expenses were $9.7 million. This is a decrease from the same period last year, which might seem odd. But digging deeper, we find that the decrease in R&D spending for the quarter was primarily because a major trial for their lead drug, denifanstat, was winding down. However, when we look at the 9-month picture, R&D expenses actually went up substantially to over $32 million. This jump is driven by new clinical trials starting, including those for denifanstat in combination with other drugs for MASH and for their other drug candidate TVB-3567. This shows they are actively pushing their drug pipeline forward, which is exactly what you want to see from a biopharma company. Their general and administrative expenses, covering things like salaries and overhead, were about $4.6 million for the quarter. This is up slightly from last year, which is mainly due to increases in consulting fees and legal expenses, and the write-off of some financing costs. They also had some other income, mainly from interest on their investments, bringing in about $1.4 million for the quarter. But this income is not enough to offset their massive operating expenses. On a per-share basis, this translates to a net loss of 40 cents. Per share for the quarter. For the 9 months, it is about $1.28 per share. Remember, these are basic and diluted numbers, meaning that even if you try to factor in potential future shares from options and warrants, the loss per share remains the same. This is typical for companies at this stage. Now let us talk about cash flow. This is where we see the money actually moving in and out. For the first 9 months of 2025, they used about $33.8 million in operating activities. This isn't a surprise given their R&D focus. The money is being spent on pushing their drug candidates through the development process. Their investing activities show a use of cash too, about $9.8 million for the 9 months. This primarily represents the purchases of marketable securities. They are essentially investing their remaining cash to try and earn a return while they wait for their drugs to progress. On the financing side, for the first 9 months of 2025, they had a very small inflow of cash, only about $275,000, mostly from stock option exercises. This is a stark contrast to the previous year where they had a significant inflow of over $104 million from a follow on stock offering in January 2024. This tells us that in the recent period, They really have not raised substantial new capital from stock sales. So where does all this leave them? As of the 30th of September 2025, they had about $32.5 million in cash. This is down significantly from over $75 million at the start of the year. The report does say they believe this cash is enough to fund operations for at least the next 12 months. This is a critical statement, and it is often followed by pronouncements about needing to raise more funds in the future. This is common for companies needing years and millions of dollars to bring a drug to market. Sagimet's executive team and board are compensated with stock options and restricted stock units, which is standard practice. For the 9 months ending the 30th of September 2025, they recorded over $4.7 million in stock-based compensation. This is a significant expense, reflecting the value of the equity awards granted to their employees and leaders. Looking at their stock options as of the 30th of September 2025, there were over 5.6 million options outstanding. The weighted average exercise price is about $6.19 per S-hair. The total unrecognized compensation expense for stock options and RAC is around $9.4 million that they expect to recognize over the next couple of years. This is essentially future stock-based dilution for existing shareholders. The company operates as a single business segment. This means all their efforts, all their spending, and all their hopes are tied to the success of their pipeline in treating metabolic dysfunction, associated steatohepatitis or MASH acne, and certain cancers. There are no other business lines to diversify risk or revenue. It is all or nothing on their current drug candidates. Now let's talk about the future and those forward-looking statements. These are essentially the company's projections and hopes for what is to come, but they are made with a stern warning that many things could go wrong. They are very upfront about the risks involved in drug development. Things like getting regulatory approval on time, successful clinical trials, and of course, facing competition. They specifically mention their reliance on potential future financings, which highlights the ongoing need for cash to keep their operations running. This is a really important point. They are saying their current cash is enough for about a year. After that, they will need more money. This is the standard narrative for many biotech companies. They are constantly looking for funding through equity sales, debt, or partnerships. It is a high-stakes game, and the success of their drug candidates is key to their survival and ability to raise more capital. They're basically admitting they have not hit profitability yet and depend heavily on external funding. This is not unusual, but it is something investors need to be very aware of. The success of their lead drug, denifanstat, especially in MASH, is absolutely critical. The report mentions positive results from a phase 2b trial, and that it was granted breakthrough therapy designation by the FDA, which is a significant positive signal. This is a huge positive breakthrough therapy designation means regulators see this drug as potentially a major advancement. This can speed up the review process and could be a game changer for Sagimet. Their phase 3 trial results in China for acne also look very strong. However, there is always a but. The market for MASH is huge and competition is fierce. They are also exploring combination therapies, like with resmetirom, which adds complexity and cost, but could also lead to better outcomes. Looking at the numbers, Sagimet is burning cash, as expected for a company in their stage of development. Their current cash position suggests they have some runway, but the pressure to secure significant additional funding will be immense as they move their advanced drug candidates into later stage trials. Their success hinges on clinical trial outcomes and regulatory approvals. The positive news about denifanstat's trial results and the FDA designation are very encouraging. Overall, Sagimet Biosciences Incorporated is a company with a promising pipeline but also significant financial risks. They are playing a long game with high stakes. The financial results show operational spending is high and they are reliant on future funding. The good news is their lead drug candidate, denifanstat, has shown strong clinical results and received important regulatory attention. The challenge will be to translate this potential into approved therapies and generate revenue. So, what is my take? Sagimet is a classic biotech bet, high risk, high reward. If denifanstat proves effective and gets approved, the upside could be massive, especially given the unmet needs in MASH. But if there are setbacks in trials or regulatory hurdles, things could get very dicey very quickly given their cash burn. It is definitely a company to watch closely, but perhaps not for the faint of heart. Alright, that is our deep dive into Sagimet Biosciences' latest financial report. What do you think about their strategy and financial health? Are you excited about their drug candidates or concerned about the cash burn? Let us know your thoughts in the comments below. If you found this analysis helpful, give us a thumbs up and subscribe for more corporate breakdowns like this. And seriously, join us on Discord. It is a great place to connect and discuss these reports. Thanks for watching, and we will see you in the next decode.